sorry,
That
Lisa.
was helpful?
Would you use the mic too?
Oh, yeah, I think, do you need me? I mean, I'm not.
Yeah.
Okay. All right. So again, then, good evening. And before we start tonight, I want to introduce somebody who is very important to the city of Key West, who I promise you is going to be of great help to us all, and whom we have needed for a very long time. And that person is standing right over there. That is Miss Tina Burns, and she is the city's Director of Housing. Can we give her a round of applause? And that is her husband, Jack Burns, who is working as the communications manager for the Key West Police Department. So we got 2 for 1, the 2 for 1 deal. Hi everybody, come on in. And I just want everybody to know that all these years we've been struggling with housing, we never had a point person at the city in this job, in this role. And as part of our strategic plan, we created this position, and then it was really hard to find the right person. And so I just want to give the floor to Tina for a moment to tell us just a little briefly about your background and your experience, because you should understand that we have somebody who knows very much about housing and has done some amazing work all over, well, not all over the Midwest, right?
No, just centralized in Kentucky.
In Kentucky. Okay, so let me give the mic to Tina.
Thank you. So I'm very happy to be here. A little bit about me, I've worked 23 years in the nonprofit housing industry. Oh, sorry, can you hear me? Okay, sorry. I feel like I'm screaming. Through my tenure with my nonprofit, just to let you know some of the achievements that we did, we helped over 900 families become first-time homebuyers, and we worked on over 63 projects and developments. I still feel like I'm screaming. For development and creation of affordable housing and for rentals. So I'm really looking forward. I know the challenges here are going to be great. But hopefully, if we get everybody to collaborate, we can bring together and make some of these projects come be fruitful and appear and make them happen. So, do you all have any questions for me? Okay. This is my husband, Jack. We do have 4 girls, which only one of them will be joining us. She'll be at a high school this year, and 2 very overactive dogs. If you all see them out, I'm going to go ahead and apologize up front. So I look forward to working with all of you all. If you all have any questions, just reach out. Thank you.
Thank you. Thank you. And Tina has done many of these home ownership courses herself, so she's a fantastic resource. She used to teach these, like the whole course. So that brings us to our course this evening. You had our first session on available opportunities that are real and coming up that will be available to you through Habitat and the 3.2 acres and other scattered sites in the city. That was course 1. Course 2 is on budgeting. We got to get our money in order we have to do it soon. Tonight is about how to build your credit so that when this time comes, and it's coming in the next couple of years, you can all feel ready. We have a fantastic person to talk to us about this tonight. She was a hit last year when we did this course. Her name is Miss Giselle Garcia, and she is the Consumer Loan Manager for Keys Federal Credit Union. She was actually born in Cuba and came to Key West, to the U.S., when she was just 5 years old. This is her 10th year working for Keys Federal, and she started out at the bottom and moved her way up. She started out as a teller, and then she fell in love with lending, and she moved up. She was an underwriter, and now she's a loan manager. She herself is the first in her family to own a home, and she did it at the ripe age of 28 years old in Key West. How about that? A round of applause for that. So in some ways, there's nobody better to talk to us tonight than someone who's been in your shoes, walked your path, and made it happen. She has a daughter, Isabella, who's 9 or 10 years old, and she's just a tremendous contributor to our community. So we are delighted to have you, Giselle, and we all have some worksheets that she's going to ask you to do, and please take home with you, and we'll give you a little homework as well. Let me hand the floor to you. Thank you.
Thank you all for coming today, taking some time to learn about credit. I do encourage questions, because questions makes it funner, but if there are any particular questions that you don't want to ask out loud or in front of others, I am leaving some business cards behind with my cell phone number. You're more than welcome to text me, call me, email me, whatever's easiest for you guys. We're first going to start from the very bottom, Some things may seem very basic on what I'm going to go over, and then we'll kind of digest from there. So today's presentation is to help you understand credit reports and to provide general information on how you can manage your credit report so you can get the credit that you need and you want. We're going to go over credit report basics. We're going to dive into the credit reports, what can hurt your credit, how you can improve your credit score, how you can build credit when you're new to credit, and then certain credit pitfalls that you definitely want to avoid. So the basics. What is credit? So credit is obtaining goods or services and paying for them at a later date upon agreed terms. It could be credit card, mortgages, car loans, personal loans, and many more. A credit report is a record of the individual's borrowing and debt payment habits. It's important in the process of securing credit, and it serves as your credit reference. I think we're out of order. I'm so sorry, give me 1 second. So this was the basic version of last year. So hold on a second, I have a better one for you guys.
I'm sorry, that's my
I'm so
fault.
sorry.
Here, okay, I'll tell you what, everybody, sorry, she gave me a more recent one, that's my fault. So how about this, can we take, even though it's early on, a 5-minute break, get yourself some pizza and a snack, and we'll tuck hers in. Sorry about that.
I got thrown off for a minute.
That's my fault, I'm sorry. Actually, I want to you try, you can do it now while I see if I can get it. So sorry.
Okay, if having good credit so easy, why doesn't everyone have it? So I pulled up some facts online. Only 33% of Americans checked their credit reports in the past year. 34% of credit reports contain errors. And 32% of millennials, ages 26 to 41, have more credit card debt than emergency savings, more than any other age bracket. So the credit report is a summary of your borrowing history, debt payment habits, personal information, and the types of credit that you have. Your credit report is a reflection of how you manage your bills and loan payments. So the credit report, when it's getting pulled, it's showing how you can manage, how you pay your bills on time, if you're responsible, if you're not responsible, and what's going on in that period. Lenders use credit reports and credit scores to determine the likelihood that you'll pay back a loan. So based on what's on your credit, they're going to determine, should I let them borrow money? Are they going to pay me back? Are they going to pay me back on time? And then non-lenders also use your credit report and credit scores for employment checks, utilities, insurance companies, apartment rental application, cell phone companies. If you've ever gone to AT&T or anything, they do have to run your credit. If you guys have bad credit, they make you put a down payment, or you cannot pay the phone at a later time. Or if you have good credit, then you're able to not put a down payment at all. And then also government agencies check the credit. Now your credit report includes your full name, addresses associated with you, so any previous addresses at all, employment history, it does state where you currently work or anything prior, Installment loans, which are loans that have a balance, you make a monthly payment and they eventually get paid down to zero. So that would be auto loans, personal loans, boat loans, etc. And then there's revolving loans, such as credit cards, lines of credit, your payment history, inquiries. If you're constantly checking your credit or applying, it will show the history of who's pulling your credit at that time. Student loans, unpaid bills. Now the funny thing about unpaid bills is you won't get credit for paying your electricity or water every single month, but if you don't pay it, it will hurt your credit because then it goes to collections and then it's showing it on there as well. Any liens or judgments and bankruptcies. Now what it doesn't include is your marital status, medical information, buying habits or what you're actually purchasing with this credit card, your income, your bank account balances, any criminal records, level of education, or your race. So the credit cycle. The way that the credit works is you obtain a loan, you make your monthly payment every single month, they update your records, and then they share your payment history with the credit reporting companies, and then the credit reporting companies share with new lenders. So every single month as you make the payment, that creditor will go ahead and report to the credit bureau and the credit bureau will update on their end. Now only 3%, I actually gave this out in the first round, if you were paying attention, only 3% of Americans can name the major credit bureaus used to report the credit. Can anyone guess on what the 3 are, or if you know them? Yep, TransUnion, Equifax, one more. And Experian. Does anyone here use any credit tracking services? Okay, what do you guys? Ooh, that's the answer I was looking for, Credit Karma. And we're gonna get to Credit Karma. It's very important that you monitor your credit. Now you can go on annualcreditreport.com, and that's actually the only website that we recommend to all of our members to check your credit for free without it being a hit on your credit. So again, every time that you check your credit or apply for credit, it's a ding on your credit, it's gonna hurt you. However, if you go on this website, you can check it for free. You can actually check all 3 credit bureaus. You can dispute it's very user-friendly. You can dispute and you can go over everything. Now, regarding Credit Karma, I had it up here in green. Credit Karma is great for tracking purposes. So I use Credit Karma for alerts since it alerts you right away, but Credit Karma is not a credit bureau. So your credit score on Credit Karma is never going to be the same as when you actually pull the credit. Unfortunately, I have members coming to me saying, I have such bad credit. Based on Credit Karma, I have a 560. And then they come to us and they actually have great credit. And then, of course, vice versa. They come and say, I have excellent credit. I'm in the 700s, and unfortunately, it's not in the 700s. So Credit Karma is great for tracking on who's pulling your credit or somewhat what's being reported, but it's not accurate. Your score on Credit Karma is not your credit score. So it's good to use, again, just to keep up with your information, but that is not going to be your accurate score. So when you're reviewing your credit on annualcreditreport.com, what you want to look for, and I actually gave you a sheet that you can use if you do end up going on the website, on the things that you have to check. You want to confirm that your personal information is accurate. Is your address accurate? Your name. My brother is a junior, so sometimes when you are a junior, your parents' information can report on your credit, or vice versa, your credit on your parents, so that could be a mess. So you always want to make sure that your personal information is accurate. Review all the accounts and make sure that you recognize them. Check the status of each account, make sure it's consistent with your records. Calculate the credit utilization, which means make sure that you're not using above if you have a $1,000 credit card and it's reporting that it's over. Confirm that your closed accounts are reflected also. And ensure the accuracy of lawsuits, bankruptcy, tax liens, and other legal actions. Now, although I work at the credit union, I work in the loan department, and I help my members every single day. Funny story. I had a member about a month ago, excellent credit, has been a member forever, 800 credit score. We happened to pull his credit, he comes to me every single time, and his score was in the 600s. And that was because he had a Verizon collections on his credit. And he's telling me, Giselle, I have no idea what that Verizon is, I don't have Verizon. I apologize, I'm so sorry, you have to go dispute on Equifax. He actually called Equifax, had to file a police report, etc. Fast forward to me being very busy in life and not controlling my credit, how I'm teaching you guys. I actually checked my credit a couple of weeks ago, and lo and behold, I had a Verizon on my credit. And I actually have AT&T. So now this is something that I actually pulled up with Credit Karma because I got their notification. It was actually from October 2022, but I didn't get the notification until a couple of weeks ago. So now I have to go and dispute that. So again, it can happen to anyone. So you always have to be on top of it. I just thought it was so funny that I was just counseling a member on this, and then it happened to me, of course. Any questions so far?
If you dispute something, how long does it take for it to be corrected with all three?
It depends. So I have disputed a medical bill before that I paid and I had the receipt for. I went on annualcreditreport.com, uploaded the receipt. Within 2 weeks it was gone. I've seen it take longer. In this particular case, I have to be honest, I haven't even started the dispute process. But based on what my member told me, he had to file a police report, he had to send the police report, which I think is silly because, you know, wasting the cop's time on fraud, but unfortunately, he had to file a police report, upload it with Equifax, and I think for him it took maybe 4 weeks or so. Maybe a little less, because I just told him about a month ago, so maybe a little less. So it really depends what the case is, what the collections is, and what they require you to upload and attach for the documents. Any other questions? All right, now the credit score. The credit score is an estimate of your credit risk based on a snapshot of your credit report at a particular point in time, which means it changes from month to month. The credit scores can range from 300 to 850, and really only 2% of Americans know their credit score. Do you guys have an idea somewhat where your credit score stands? Yeah. Now, on my first class that I ever did, this did come up. What is the difference between a credit score and a FICO score? So the credit score and a FICO score are referring to the same thing. However, the FICO score is a different type of scoring model. We're going to get into how the credit score is made and what model and what percentage is used to base your credit score, but FICO is completely different. A lot of lenders are using FICO now, and it's more of a soft hit on your credit. If you guys have any major credit cards like Discover or American Express, they offer that free FICO score. It's very close to the credit score, but it's not exactly the same. Now, Credit Karma uses what's called the Vantage Score 3.0 model. So that's completely different. So having different credit scores is normal. It's never going to be the same because it really depends when that creditor reports to the credit bureau. So you can have a Discover card that reports to Equifax on the 15th of the month. You can have a Capital One that reports on the 5th of the month. So it really depends when that creditor is reporting to the credit bureau. That Verizon collection is not on my Experian, but it's on my Equifax. So my Equifax credit score went all the way down, and my TransUnion is still up. It's just not reporting on there. So your credit score is never going to be the same on each one. Life also happens, so the credit score can be one day, 7:30, and then all of a sudden it's summer and you have to plan a vacation and you have to put that vacation on your credit card, and that credit card is maxed out, and then your child also needs braces, and then back to school expenses, etc., and you've just maxed out all your credit cards, and now your credit all of a sudden goes down. Well, you start making payments towards it and paying off the debt, and then your credit goes up. So this is just an example here. This person was up around the 700s. They made a big credit card purchase, but they've been making their payments on time, so their credit starts going up a little bit. Then they opened up a new credit card. Then as they pay off the credit card balance, it stays steady. So really, it can change depending on what's going on in life. Any questions on that? So for a good credit score, this is what I mean about what makes up credit. The most important thing that I want to stress is paying your bills on time. Payment history makes up 35% of your credit score. One late payment, one late $25 minimum credit card payment is really going to hurt your score, and it takes a while for your score to go back up. So the most important piece, if you can't pay the credit card in full, if you can't make an extra payment, always try making the minimum payment that they require you to make. Going over your limit is also 30%, so if you have a $1,000 credit card and you decide to go shopping, just make sure it doesn't go over $1,000, because that takes a big toll on your credit as well. Open or applying for a lot of credit, inquiries take up 10%. So I'm not sure if you guys have purchased a car and you go to the dealership and they send your credit application to 10 different banks, and the 10 different banks are now pulling your credit. That's going to affect you for just a little bit. If a lender takes a look at that, they can see it's all for autos, and it makes sense. However, if you go inside of TJ Maxx and they offer you a credit card and you sign up for it because you're going to get 10% off, and my mom hates to use this example because my mom works at TJ Maxx, so she sells it and I tell people not to get it. You go to TJ Maxx and you get that credit card, and then you go to Victoria's Secret and they offer you another 10% for that credit card, and you open up that credit card, and then you decide you're going to get a personal loan also because you also want to treat yourself. And all of a sudden you have 10 different inquiries from different lenders. That looks suspicious. What's going on? Are they living beyond their means? What's going on that there's a spending habit? Whole bunch of new inquiries. But again, that only takes up 10%. You also have to have recent credit activity. That makes up 15%. I've also had members that have no debt whatsoever. They pay off their mortgage, and all of a sudden they pay off their mortgage and the credit goes down. And they're like, but I just paid everything off. How does my credit go down? You also need to have recent activity to keep your credit reporting. And then there's also installment versus revolving. So credit is made up of both. Again, installment are loans that you pay down, and revolving are credit cards. So if you have a $1,000 credit card, that's great. You can start building credit with that. However, how are you going to prove to the bank that you're able to make an auto payment, a mortgage payment, etc.? So that also takes up 10%. But again, the thing that I always like stressing the most is payment history. Any questions on that? Yes. It depends overall. So if you open up the credit card and you max it out, it's going to go down.
No, if you just
Yeah.
open it up and
It's not much points that are removed from just one inquiry and one new account. But again, that account takes up how many other credit cards do you have, what's your overall limit on all those credit cards, how much are you using on your overall capacity, I'd say.
And then let's say you have a credit card, $1,000 limit, you max it out, you purchase something, and then within 2 days you pay it off.
Yep.
Does that, I know that it goes down, but how quickly does it go back up?
So we were going to get into that, but I actually want to talk about that now because that's a really good question. So when you have a $1,000 credit card, her question was if you have a $1,000 credit card and you max it out, how would that affect you? On every credit card statement, there's a cycle date and then there's your due date, and not many people know that. Your cycle date is when they report to the credit bureau. So if someone opens up a credit card and they start using it to build credit, but they're paying it before the cycle date, it's showing as no history because you're paying it off. So if you were to max it out and then you pay it before your cycle date, you're going to be okay. It's not going to, at least try using 30% or less.
So if you pay it before the cycle date, in other words,
It's not going to show negatively. Well, it's not going to show at all if you're paying the full balance, because you're doing it before the cycle date. So when it actually reports and it reports to the credit bureaus, it's showing nothing. So if you use 1,000 and you pay it down to 300, that's great. It's not going to affect you as much because it's not maxed out and it's not over 30%.
So in order to continue to build the credit, it's not a good idea to pay, use it, max it out, then pay it before the cycle date, thinking that you're going to your credit is actually not.
No, and it's hard for people to grasp on the idea and to even keep up with cycle date, due date, especially when you have so many bills, so many different due dates. So what I always suggest is staying below 30%, and that's your overall credit. So it's not just on that $1,000 credit card. If you have other credit cards and your overall revolving balance is $20,000, that $1,000 is not going to hurt you because you're only using, 1,000 out of all that. So it's good if you want to use your credit card, get points, it's free money, and you want to use it and then you pay it off within your cycle date, great. But if you're actually on the track of building credit, then I would just pay it down to 30% or less. If not, it's going to report as maxed out, and then that's going to impact you. Any other questions? So again, what can hurt your scores? Missing the payments, opening store credit cards. Store credit cards are the worst. I do not recommend store credit cards. If you guys have an emergency, TJ Maxx is not going to save you and buy you a plane ticket or braces or anything else. So you always want to have, if you do want to open up a credit card, it's a major credit card, something that you are able to use for emergency, something you're able to use for gas, something that you're able to use for whatever you need. Opening numerous loans and credit cards in a short time frame, so we went over that, that's definitely a red flag. Maxing out your credit cards. A lot of people are scared if you've had a debt consolidation before and you've been in a lot of credit card debt and you've gotten yourself out. I've heard a lot of people say, I just don't want any credit cards, I don't want anything, I don't want any accounts, I'm going to just close everything. Well, closing the accounts actually hurts you too. So once you have those open, unless it's a credit card that's charging you like an annual fee, I actually used this example in my first class. My first credit card ever was a Capital One credit card. The limit's like, I don't know, $300, $500, it's nothing. I got that credit card when I was 19, and I haven't used that credit card in years. And they charge me an annual fee every single year. And unfortunately, I cannot close it because that is the oldest trade, which is the oldest card showing history on my credit. So if I were to close it, the length of time that I've had credit is going to be less, which also hurts my credit. So I have to bite the bullet and pay the $49 or whatever it is annual fee so that credit card doesn't get closed. So you really don't want to close your old accounts that you've had for a while because that's your length of credit and that really helps your credit. If you were to close all your accounts and then tomorrow apply for a credit card, it's showing that you just started with credit and you have no credit at all. Co-signing on other people's credit, that's a big one also. Can definitely affect your credit. Once you co-sign for someone's credit or for a loan or for anything, it means you are responsible for that payment. So you may have excellent credit and your friend, partner, whoever it is wants you, daughter, family member wants you to co-sign for them on that car loan, and you're telling them a $650 payment? No way, that's crazy, but okay, I'll co-sign for you. That $650 payment is also yours. So they stop paying, it's going to hurt your credit. So you always want to think before co-signing on other people's credit and just make sure that you're going about it on the right way. And then of course, errors on your credit report as well. Do you guys have any questions regarding that?
I just wanted to say, I did the same thing you did, but I thought I had like a Capital One or something, and I got a different Capital One card, and I called them and said, can I just close this one and switch to this type of account? Is that going to hurt my credit? And they said no.
So
it did.
Yes.
Yeah.
So some companies, I know that we do, so when, let's say you have like a regular credit card with us and then you've been doing great, so we're going to upgrade you to a rewards card. When we upgrade you, your open date on the new rewards card and we close your other one is still as of your other one. However, yeah, most companies are closing it and the open date is brand new, so that's only affecting you. So I would just be very careful with that as well. And Capital One's weird. I've seen people with Capital One charge-offs and then Capital One still approves them, but then again, Capital One has very high interest rates, which we're going to get into. So possible consequences of poor credit history is the inability to obtain a loan or a mortgage, higher interest rates on loans and mortgages, higher car insurance premiums, difficulty obtaining rental housing, or even employment. I put an example here of a loan for $15,000. Let's say someone with excellent credit can have a 5% and their payment's only $352. Somebody with good credit can have a 10%, their payment's $391. And then somebody with fair credit can have a 50% and their payment's $427. The way the economy is right now, these payments are not even real. The prices of vehicles are crazy, which means interest rate now more than ever is so important. The interest rates are up, the prices on everything is up. So now more than ever, you really want to focus on getting your credit right so you're getting a lower interest rate and getting a lower payment. Any questions on this part at all? It used to be that you can buy a brand new car with maybe $25,000. That's not the case anymore. So car payments in the lending world, what seemed reasonable for somebody with no credit or starting credit was maybe $350, $400. We're seeing people now just starting to build credit with payments of $600. It's just all the prices are up, so that's so important. So how can you improve your score? And again, if you guys are having issues improving the score, you want to build credit or whatever it is, I have my business cards. Please feel free to text me. You're not bothering me. I may take just a little bit to answer back, but that's what I'm here for. That way we can really get into your credit report. No commitment to do anything with Keys Fed or anything like that. I'm just here to help you, so we can just go over your credit, let you know what's on there, what I would suggest, and then kind of go from there. Again, keeping those long-standing accounts open. Don't apply for multiple loans and credit cards at the same time. Choose the right types of credit. Create and follow a monthly budget and financial plan, which Maggie went over last week. Pay down your debt or consider a debt consolidation loan. Having a lot of credit cards and a lot of debt and making a lot of payments to different companies can be stressful. And you can feel like you're making the minimum payment and that balance is not going down because the interest rate is so high. So a lot of financial institutions offer what's called a debt consolidation loan. Now, don't be fooled by the debt consolidations that you call the 1-800 number and they tell you, just stop paying and we'll take care of it for you. So a lot of companies do that and they tell you that, and by that time that they're going to help you, all they're doing is they're telling you not to pay, they wait until it's in collections, and then they negotiate a payment plan with that lender. By that time, your credit already has a bunch of late payments, it's already in collections, it's already charged off, and then they're still charging you for that. That's something you can do on your own if you just don't want to pay the bills. You don't have to pay someone for that. So the debt consolidation loan is, they pay off all of your credit card debt at a lower rate, of course, and then you have one monthly payment, and you have a time frame that, a reasonable time frame, whether it's 3 years, 4 years, 5 years, or even 6 years, that you give yourself to pay that down. And it's easier, it's at a lower rate, one payment, a lower payment, one financial institution, and you no longer have to worry about paying a higher rate or multiple payments. And of course, making your payments on time. Any questions on that?
I have a question.
Yes.
If you have one credit card, can you do a debt consolidation loan?
Sure.
You can. And
Anyone can have a $30,000 credit card at a high rate, and it's super, yeah.
yeah. And would the debt consolidation loan affect your credit differently with the same balance than it would on a credit card? Like, would that be better to have?
Yes, because a debt consolidation is considered an installment loan. So it's just going to show as a personal loan on your credit. And then your credit cards are going to show as paid off versus your credit cards being maxed out, which affect your overall capacity on your credit, number of accounts, and etc. So the personal loan is just going to show as it doesn't even say debt consolidation loan on your credit report. It just shows as a personal loan, and it just shows as a monthly payment. So tips for the credit cards, if you are shopping for credit cards, is use less than 30% of your available balance and limit. So that's what I was saying earlier. If you have a $1,000 limit, try using $300 or less. Pay down or off your credit card balances. Again, more revolving debt into installment. And then choose the right type of credit card. Now, the ideal credit card should have no annual fees. Always read the fine print. If it has an annual fee, you should not be paying them to use their services. A grace period for payments. So there's a lot of companies that offer a 5-day grace period, a 10-day grace period before they even report to your credit report that you're late. Reward programs for sure. I can't stress this enough. If you are someone that doesn't want to use your credit card, you don't want to fall into debt, what I always suggest is using your credit card to pay for the bills that you already have the money in your account for. A lot of credit cards offer cash back. They offer airplane mileage. Use your credit card for that gas. Put your electricity bill and your water bill on auto pay on your credit cards. You already have the money in your bank account. Now it's on auto pay, so you don't have to worry about it. At the end of the month, you pay off your credit card and you're earning free money. It's free money on the rewards and cash that you're getting. Now that's only if you can trust yourself and be responsible, because I know myself, I've done that, and then I just go shopping with that money. So it's very important, as long as you're able to keep up with that, it's free money. You guys are winning in that. Card upgrade options, like I said, a lot of companies offer a very small limit credit card, and then they upgrade you automatically. There's a lot of credit card companies that increase your limit automatically without even pulling your credit. It's just a soft hit. Companies that do that are great. My Capital One is still at $3,500, I don't know. Flexible credit limits and low rates that do not exceed 18%. A lot of credit cards are 24, 27%. Shop credit unions, whether it's us or not. Credit unions, by law, cannot exceed 18% on any loans. So you can have the worst credit, and it will not exceed 18%. For a car loan, for a credit card, it cannot go from there. And that makes a big difference when you're paying down.
That percentage is only divided by the number of days. What is it? So what's going to be
So the 18% is on your overall statement balance, because if you pay your credit card off in full every single month, you're actually paying no interest. But if you carry on that balance and only make minimum payments, they'll charge you interest based on that balance at that time. But it doesn't have to do with the days in the month. Any other questions on that?
Yeah, the percentage is based off the balance, not the total balance, but the balance to date. Let's say if it goes, if you pay $1,000 down to 300 and then.
You're only going to get interest on the 300.
The 300
Yep, that's right. Yep.
That's like,
Right. That cycle and due date is so confusing, but once you learn that trick to that on your credit and using credit cards to pay for what you already have the money for, you're making money basically. So a few tips on building credit from scratch. Consider a secured credit card. So many companies offer a secured credit card. What that is, it's tough because you need credit to get a credit card, but you won't get approved for a credit card, if you don't have credit. So a way to start building credit and getting a credit card is a secured credit card. So that means, let's say it could be $500 of your own money. You put that on a card. You're able to use the card, and as you start building credit, hopefully whatever financial company you choose, once you've built credit and you've proven yourself that you're able to make those payments every single month, they'll upgrade you to a regular credit card, and then you get your money back. A lot of financial institutions also offer secured loans. Same thing, you put $500, they freeze it, you make your monthly payment every single month, and then you get your money back. Pay your credit card balance in full each month, set up automatic payments for credit cards so you don't forget. Again, open different types of accounts. When someone comes to me with absolutely no credit at all, I always offer a $1,000 credit card and a $1,000 loan. If you don't want the loan and you don't want to have the monthly payment, put those $1,000 in your account and just don't touch it and let the loan pay for itself. What you're going to pay on interest on that is not much. And now you're going to show that you're able to keep up with the monthly payment and a credit card. And after a year, after you've paid down that $1,000 and maintained that credit card, we then approve you for more. I mean, I've helped people that have just gotten here to this country with no credit at all, with just those two loans, and now they're purchasing vehicles and boats and even homes. So there's always a way to work around that. And then, of course, become an authorized user. Now, this can go both ways. The difference between a co-signer and an authorized user. A co-signer, you are responsible for that loan. That is your debt as well. An authorized user has the ability to use the account, but they are not responsible for making a payment. So when I met my boyfriend, he had really, really, really bad credit. So what I did to help him establish credit again is I added him as an authorized user on my credit card, which means all of my credit card history and any data that's being updated is going to report on his credit report as well. So that helped him increase his credit score, and then he was able to obtain his own credit. Now this can go two ways, because if I were to add him as an authorized user on my credit card and I stopped paying, it would have hurt his score and his credit more. Does that make sense? So you can always add, a lot of parents add their children as well once they turn 18 as an authorized user. Some companies allow it at 16 also to help their child start building credit young as well. Any questions on that? So while you're waiting for your final loan approval, you want to avoid big purchases like cars, boats, or expensive items. All of this takes into toll. They look at all of the debt that you have on your credit and all of your monthly payments, and that can ultimately determine how much a lender will let you borrow. So once you're in the process and you're getting close, now is the time to start working on your credit, since 2 years from now it's going to be available. That way you're at a good place. So if you're trying to purchase anything right now, I would do it now before then. Changing or leaving your job, having a new job is also kind of risky when underwriting. If we see that you just started a new employment, are you going to stay there for long? Are you going to be able to make this payment? Opening or closing credit lines or accounts, going delinquent, always pay your bills on time, opening, co-signing on new loans or credit cards, and of course, missing the sweat equity hours if they are required. Before I purchased, it's actually a lending habit that when someone purchases a home, right after, you get a new car, you get a new boat. We see it all the time because people do wait a year or two to purchase things. So once you sign off on that mortgage and you're in your home, we see rooms to go credit card because it's 0%. We see a new car. So your goal is to maintain a positive credit history that demonstrates you're a trustworthy person with the stability to fulfill your obligations and pay back your debt. You want to show that you're responsible. You want to show that you're able to afford that monthly payment every single month. On our website, we do offer 3 different financial education apps. And some of them are even in Spanish. Some of them give you free gift cards, a $5, $10 Starbucks gift card for just doing a simple task. They're actually fun. They're not as boring. They're very interactive and they give really good information. So I mean, it's free gift cards. And then here's my information. Again, I prefer my cell phone just because my office is always ringing. And my email as well. And I have my business card. If you guys have any questions at all, don't feel embarrassed or ashamed or anything like that. No question's a stupid question, and that's what I'm here for. And just let me know. Any questions at all?
What do you think about, there's a lot of advertising these days, people shopping around credit repair.
So that credit repair is that 1-800 number that I'm telling you. The credit repair, most of the time, what they tell you to do is just stop paying your bills. So then they wait until you are delinquent and then just settle the bills for you. But at that point, your credit is already down. Credit repairs also help people. Now, not all companies are like that, but I've also heard recently some credit repairs that you have to pay them for them to consolidate and help you budget out. That's something that you can do. I can help you do that. It's very easy. I also gave you guys a budgeting spreadsheet. I'm big on writing things down. You may think you know the debt that you have until you start writing it down and then you're like, oopsies, because it's happened to me too. So it's good to write it down, actually see it in front of you, set up a goal that you want, and you know your goal with your credit, whether it's purchasing a home or purchasing a car in 6 months, whatever it might be, getting out of debt. It's good just to write it down so you have an idea and then kind of go from there.
Matt, this, Giselle, that you
Yes, yeah. I'm big on paper. It happens to me all the time. Sometimes I'm like, I don't have that much to do, and then I start my to-do list, writing it down, and I have a lot to do. Same with credit. Any other questions?
So, what model FICO score are they using for home loan? Because I know it's like different numbers to them. For like, you got a FICO score for your auto loan, or for your house, or for a credit card.
I don't want to answer that question wrong because that's more into the mortgage lending and I'm more into consumer lending, so I'm not entirely sure on that. I know that as consumer lending is boats, cars, RVs, anything that doesn't have to do with mortgages, we use Equifax, and that's the only one that we use, and we only use one score. But I do know what you're talking about because when I purchased my home, yeah, but I have no knowledge in that, so I don't want to answer you wrong. But I do have a mortgage person that I can give you that can give you an answer to that.
The person that's speaking next week should be able to answer that for you.
I just don't want to give you wrong information because I'm not
And
sure.
next week we have a mortgage lender.
Just on the credit karma. So let's say you check it, it's not doing so.
Credit Karma is not pulling at all. No, Credit Karma is just getting public information from the 3 credit bureaus. And a good hint to know that Credit Karma is not an accurate credit score is that I think Credit Karma updates now daily. It used to be every week. Now it's daily. Your credit report doesn't update daily because creditors only report to the credit bureau once a month. But I mean, it's good for tracking. If it wasn't for Credit Karma, honestly, I haven't been checking my credit that often. I wouldn't have known about that. There's also My Equifax, but I believe on annualcreditreport.com you can also do that, freeze your credit. If you're not planning on purchasing anything, there's no reason for your credit to be open. You can actually freeze your credit. It's super easy. You just click freeze credit, which means no one can pull your credit, which means you're avoiding fraud. And anytime that someone does want to pull your credit, all you have to do is push that button, unfreeze, and then they're able to pull it. But there's no reason your credit should be open if you're not working towards any financial goal right now.
Now I've seen, my experience, where they receive it a lot. Is there a difference?
No, I believe it's the same. I've only locked it with Equifax, but I believe it's the same. Freeze and lock is the same. No other questions?
All right, can we give
Thank
her
you
a round of
guys
applause?
so much.
I have one last question, turning it off the bat. If everybody were to walk out of here tonight and do one thing, one piece of homework that would get them closer to actually building their credit so that they can have a mortgage for these opportunities, what is their homework? One thing.
Fill out that spreadsheet and call me.
Did you hear that? Yep. Okay.
And don't be embarrassed. I've had medical bills on my credit. I've done I don't know how many debt consolidations. I've had our car loan at a 27% interest rate. Again, I started from the very bottom up. And anything you tell me, it's nothing I haven't heard before. Even divorce.
So what you have here is this, but there's a person here who is offering for free to sit down and meet with you and work on your own debt and debt consolidation with no strings attached.
No commitment.
Am I right in saying that you'd be crazy not to call this woman? Because it's an hour of your time and you need to get to your own individual, if you might have done it already, but if you haven't, this is necessary in order for you to build the credit you need to buy a home. And you're in this course because you want to buy a home.
And you guys can do it. I always say, if I can do it, y'all can do it for sure.
Okay? And there's real opportunities. This is what we keep saying, there's real opportunities. So on your way out, it's the card. Are you going to do this if I ask you next week? I'm going to do it. Okay? And here's the other thing. I want you to turn to the person next to you, and I want you to tell them, what's the one takeaway you got from tonight? Every time I go to a class or I go to a seminar, I say, like, what's the one thing I learned that, like, I'll never forget? I'll tell you what my takeaway was tonight. Well, I had two of them. One was that come hell or high water, I've got to pay something on my bills every month. Okay, at least the minimum payment, or 35% of my credit score is based on that. So I will never, thank you, ever skip a credit card payment again. And then my other thing is I have to get rid of all of my, sorry to your mom, I have to get rid of my TJ Maxx card. So
Now that you have it, don't close it.
I'm
Just
so I want you to turn to the person next to you, like one thing you heard tonight, you're like, wow, I didn't know that. Go. You have 5 seconds. Go. Okay, can I make a suggestion? Go tell that to somebody else. Because everybody needs this information. Okay? Go tell that tonight to somebody else. Alright, so if we have no other, we're going to end early. If we have no other questions for Giselle, did you think she was great and useful and practical and real? And just, I guess, grab something to eat on the way out so Hannah and I don't keep taking all the pizza home. Next week you come hungry because I'm bringing you sandwiches. Wait, one last thing. It's my friend Clement's birthday tomorrow, so we have to sing happy birthday to him. Ready? 1, 2, 3. Happy birthday.